Hey, if you want to improve your options trading results, then you have to do one thing. You got to learn technical analysis of the stock market. What's that? It's chart reading. If you want to be a good options trader, then you have to know which way a stock is going to move, because you can't just trade options out of the blue without understanding what's happening with the underlying stock that you're trading the options on, right? So you have to do your technical analysis, which is chart reading, so you can understand which way the stock is going to move, and then you could make your options trade. So what we do here every week, I make these free videos for the trading community. We're going to look at the stock charts, and we're going to do our research. We're going to do our homework, and we're going to put in the work to get ready for next week's trading. So I'm going to show you my screens, my charts, my setups. I've been doing this for over 30 years now, and we're going to look at the charts and help you become a better options trader. All right, so let's just jump right into it here. As we do every week, everyone, I'm Lee Lowell from thesmartoptionseller.com. Let's jump right in. We always want to look at the S&P 500 first, because that gives us the best overall view of the market's health as a whole. And what you see in front of you is the charts that I look at. This is a daily chart of the SPY, the SPY. You can always look up here in the left-hand corner for the symbol. This is the exchange traded fund for the S&P 500. What you see in front of you on the screen here is my chart setup. Up here, this is the price action. Each one of these bars is 1 day's worth of trading. These are daily open, high, low, close bars. And I only have 3 moving averages up here. I've got a 20-day, a 50-day, 200-day, all simple moving averages. And down here is the RSI indicator. It's got a 14-day look-back period, and it oscillates between overbought and oversold levels, with the 80 level and 20 levels as my parameters. Want to keep it simple. You don't need a lot of indicators on your charts. Really what you're trying to do is you're trying to see which way a stock or index is trending. The trend is your friend. You want to get on board the trend for as long as you can. And when you want to get into a trend, you want to get in on a pullback if you're looking to be bullish, or you want to get in on a top if you want to take a bearish trade. So all you have to do is just see which way the market is moving. Is it going up, down, or sideways? And you can draw these blue lines, which is what I use. Those are called, we draw these channels, and the channels help us see which way a stock or index is trending. And you just connect some of the recent tops and recent bottoms, and it'll project out where the market should be bouncing, and bouncing off of on the top, bouncing off on the bottom. So those channels help you see which way a market is trending. And you will also see how a lot of the price action will either bounce or hug along one of the moving averages. Okay, so that's a real easy way to see which way a stock or index is trending, and then you make your options trade based off of that. So what I want to do here, I like to go over what I'm seeing on the indexes, then we'll look at more popular individual stocks to see, what may be coming for the week ahead. So as I said, we start with the S&P 500 because we always want to know what the indexes are doing. Okay, so as you can see here, late October of 2023, the market just went into this nice, powerful uptrend. And it started uptrending back in October of 2022 after a long downtrend starting in January 2022. So October seems to be the time when the market likes to go in an uptrend. If you follow the seasonality of the stock markets, the best period is probably from early November to sometime in the spring, April or so. And 2 years in a row, October, we really had the uptrends getting started. So anyway, we are now is right around the beginning of April, the S&P 500 hit all-time new highs. Now, this is the SPY chart. So we got, a little bit above almost $525 per share on the SPY. And then the last 2 weeks or so, we've had this little down move. But you can see, while we were in the uptrend, it was hugging along the 20-day moving average, which is this blue line right here, okay? And here is the bottom edge of the channel. Now, when you have a really strongly trending stock or index, it'll hug along the 20-day moving average. And when it gets a little bit off course, then it looks to the 50-day moving average for that next line of support in the uptrend. So you can see right here, here's the 50-day moving average. And this this is Friday right here, April 12th, 2024. This one bar, let me open this up a little more. This one bar right here was Friday, April 12th, and we had a down day. Okay, but you can see right where it stopped. It stopped right on the 50-day moving average. So these moving averages are really good areas of support and resistance. Resistance would be when the stock has been trending down and then it starts to jump back up. It'll hit resistance at the 20-day or 50-day. But since we've been on an uptrend, the pullback looks for support at either the 20-day or 50-day. So the 20-day for the longest period of time was that support. You can see as it went up, it pulled back to the 20-day, went up, pulled back to the 20-day, went up for a good period of time, also pulled back to the 20-day here. So if we get more selling, then the 50-day moving average comes into play, which is where we stopped right here on Friday, April 12th. So next week is going to be a big decider whether this support will hold and then we'll have a new uptrend starting, or will we get more selling coming down. Now, one of the reasons why we had this down move is that there's always going to be outside news affecting the markets, geopolitical news. There was rumblings that Iran was going to invade or have an attack on Israel. So, news items like that could always spook the market. It can always cause selling. But in reality, in the long run, and I'm talking about the U.S. markets here, the U.S. stock markets are made up of companies that are selling products people are buying, and these companies are profitable quarter after quarter. So stock prices will go up. But, there's always going to be those short-term blips where outside news is going to shake up the market a little bit and cause some selling. So that's what we had, the last couple of days of this past trading week. Now, will we get the bounce here and continue on for next week? We will have to see. But stopping right on the 50-day moving average just confirms, the long-time notion that stocks will hug along certain moving averages. Now, we really don't want it to jump through it and pop down to come down to the 200-day moving average. That would be a really big drop, and that would really mean that there's something really wrong going on here. Now, we also had some inflation numbers come out this week in the U.S. We had the CPI and the PPI. That's the consumer price index, the producer price index. Now, the CPI came out on Wednesday this past week. It was a little higher than expected, meaning prices for almost all goods and things that people pay for is still a little higher. And that means that the U.S. Federal Reserve is probably going to keep interest rates higher a little bit longer than expected, which is typically bearish for the market, because the stock market doesn't like when interest rates are high, because people can pull their money out of the stocks and put it into fixed income securities like CDs and treasury bills and other fixed income securities. So that's sort of what led to some of the selling this week as well. But it shouldn't be a long-term downtrending thing here. It's not going to cause a recession. It's not going to cause the economy to go, just really bad. That won't happen. But we will get the pullbacks from time to time. So we have to watch the charts and use the timing of when we should get in. Now, if you want to look for your higher probability setup to get into a bullish trade, then you wait to see if the market starts to bounce, the next couple of days of early next week. And if it does, that should give you an indicator that, okay, things are still pretty good. The market should keep going higher. If it pops down through the 50-day moving average, then you probably want to hold off on your bullish trades, because you don't know if more selling is just going to keep coming in. But these moving averages can help you decide, is it going to bounce right here, or is it going to keep going through? So I would wait, a day or two next week to see if the buying comes back in. If it does, then that's your higher probability setup that the next uptrend is probably underway. Not 100% guaranteed. There's no guarantees in trading. It could go up for a couple of days and then immediately get sold back off again. That's the chance that we all take. Okay, so we just want to use the patterns and the probabilities of long-term trading, things that we've seen many, many times in the past, to give us an idea of what might come forward. So in my opinion, wait a couple days, see if the next uptrend starts, and you go from there. All right, so that's what's going on in the S&P 500. Let's look at the NASDAQ. We look at the triple Qs to see what's going on there. Same thing, going up nicely since October. It's kind of hugging along the 20-day moving average. And then we had the selling. Not really that much selling. It's more sideways than anything else. But you can see that it's starting. Look at these days when it bounced right off the 50-day moving average. This is not a coincidence, people. This happens all the time. So here's the 50-day moving average right here. And you can see 1, 2, 3 days where it bounced right off the 50-day moving average. So once again, like the S&P 500, we want to see if some buying comes in the next couple of days, early next week. And if it does, that should be the catalyst to start moving it to more all-time new highs on the NASDAQ. Okay? You don't have to be in the market every single day. You don't have to make trades every minute of every trading day. You want to be in for the long haul, and sometimes you have to sit on your hands and just do nothing. I know a lot of people, they want to get into trading. They want a career change. They think this is the greatest thing ever, and they feel like they have to be in the market every single day making money because they have bills to pay. That's just not how it works. If you're going to be a high frequency trader like that, people will try to trade off of 1 minute charts. So let's go to the 1 minute chart, and people will try to buy, sell, buy, sell, buy, sell. That is so exhausting and so hard to do. We like to stick with the longer term daily charts. And if we have to just do nothing for a day, 2 days, 3 days, whatever, that's what we do. We want to wait for the stock charts to tell us when the right time to get in is. So let's look at the Dow Jones. We use the DIA, the diamonds. Here's the symbol right here. And we want to see what the market is telling us for the Dow Jones. And we just want to wait for my prices to pull up here. Come on, filter in. Here we go. So the Dow a little bit weaker than the NASDAQ and S&P 500. You can see how the last 2 weeks, pretty strong selling in the Dow stocks, and has fallen definitely below the 20-day and 50-day. And you got the upsloping 200-day lurking down here. RSI coming off a little bit, not completely oversold yet. So the Dow a little bit weaker. If I wanted to be bullish, I'd be looking more at the NASDAQ and S&P 500. So that's what we pretty much look at. So let's start to look at some individual stocks here. We look at the more popular stocks because those are the ones that people trade the most, and that's where a lot of the action is. Okay, so we look at Apple first. And if you've been watching my videos in the past, you know that we've been talking about Apple. We've been talking about this $170 level was the make or break point for Apple. It had come down here a number of times. So we drew the support line. In order to draw your support line, you have to look to the past to see where the stock or index has bounced off of or has rejected from to find your support and resistance level. So we can see the 170 level was really that line of support. And just in the last 2 days of last week, Thursday and Friday, April 11th and 12th, it bounced really hard. It went from just under 170 up to close at 176.55. So Apple had this bounce. I think there was some news out there that came out about Apple, and it had a good, $5, $6, $7 pop in the last 2 days. So that gives me some hope that maybe Apple has turned the corner here from being in the doldrums around 170. Now you can also see here's the down sloping 50-day moving average right here, and obviously that's where the resistance would be for Apple. So Apple's got a lot of upside that it has to get through before it can really make a longer term uptrend. So as I said, here's the 20-day and 50-day are down sloping. The 200-day was starting to curl over to the downside. So the slope of the moving averages are very important as well. The 20-day and 50-day have been down sloping for about 2 months or so. So that means Apple's been in a downtrend, and before it starts to get into a more of an uptrend, it's got to create an uptrend, lots of days worth of uptrending for those moving averages to start to curl up again. So as you can see, here's the 50-day moving average, and Apple's really got rejected back from there. So for the Apple bulls out there, what we really want to see for the next week or two is for Apple to stay above the 50-day moving average, continue on that uptrend, and get above the 200-day moving average. Once it gets above 183, 184 on a number of days, then you can become more confident that Apple's pretty much turned the corner and that uptrend should be intact and keep going. Now, you may have missed the bottom. No one's ever going to pinpoint the exact bottom. What you want to do is get in on the trend once the trend starts. So if Apple could keep up moving sideways and upwards and get above those low 180s up to maybe 185, then you could feel more confident about getting into longer term bullish trades on Apple, because by then it's going to have blasted through all the moving averages and price action. It's got the momentum behind it to keep moving on the upswing. So yes, everyone wants to pick a bottom here, but you really want to wait for that trend to turn, because if you started buying, you started buying here and here and here, the Apple was still going down. So you want to wait until you get some more confirmed uptrend intact before you really start to get in on the buy side. Okay, so that's how you look at it. So Apple, it's good to see it bounce off the 170. I'm still going to wait for more confirmed uptrend before I really get into more bullish plays on Apple. Let's look at the more solid uptrending stocks. I talked about Microsoft last week. I said Microsoft was my favorite bullish stock to look at because it had such a great uptrending chart hugging along the 20-day moving average. Now we saw how the general market, the S&P 500 and the Dow all were down last week, or at least the last 2 weeks. But look how Microsoft has stayed up here. Just a little bit of sideways action, did not have the selling that came in for the rest of the market. So that also means when everything else is down and a stock's going sideways, that means it's a really, really strong stock. So Microsoft, still one of my favorite stocks for continued bullish action. So if the indexes start to go up next week, Microsoft is just going to go along for the ride, and it's going to get above these. I believe this was all-time highs for Microsoft. Let's take a look at the monthly chart. Yeah, so Microsoft's at all-time highs here, and if everything starts to turn around to the higher next week, Microsoft's going to take off like a rocket, and it's going to take out these all-time new highs here. So I'd say around $430 was the all-time highs for Microsoft, trading around just under $422 now. If things start taking off next week, Microsoft should easily break above 430 and keep going. Very strong looking stock. Let's look at Amazon. Has pretty much the same kind of chart as Microsoft. Strong. Here's the 20-day moving average. And Amazon actually went up while everything else was going down. Another sign of a really strong stock. Now, if I was to get on Amazon, I'd more want to wait for it to come back down a little bit towards the 20-day moving average, but that may or may not happen. If everything jumps out of the gate early next week to the upside, Amazon's just going to take off right from here. So keep an eye on that. But that's a strong looking stock as well. Meta is another strong looking chart, just like the other two, hugging along the 20-day moving average. Didn't really do much last week as everything else was selling off. Another indicator of a very strong stock. I believe Google looked pretty good as well. Yep, Google, look at that, strong. Everything was going down, Google was going up. So these are how you pinpoint, how stocks are looking, how they're trending, and how they're reacting to the general market as a whole. You want to compare these individual stocks to what the general market is doing, mostly to the S&P 500. If the S&P 500 is going down, but yet these stocks are still going up, those are some really strong stocks, okay? Let's look at NVIDIA, because that was a strong one, but it started to get it sold off a little bit, but still holding up pretty well. That 900 level is like the mid level here. So it's trying to hold around that 900 level. NVIDIA has just been a really, really strong stock, pulled back a little bit, but hanging in there. So we have a trade on NVIDIA as well right now, a bullish trade. So we want to see that go up. What other stocks that we talk about? SMCI. People talk about that. They ask me about it all the time. So I had the powerful move up, had the congestion pattern. I said the congestion pattern is when the prices get real tight and then it blasts out in one direction or another. You can see how it popped down through the bottom of the congestion pattern, but holding right on the 50-day moving average. The bulls don't want to give up the gains on SMCI, so we have to see what's going to happen next week. It's holding right here on the 50-day moving average. If everything else, and I'm talking about the indexes, start to go higher next week, SMCI will should have a nice jump higher as well. Let's look at Costco. Had been a strong stock, but had some selling come in. Fell through the 20-day, fell through the 50-day right here, but also bounced back up. So you got the 50-day and 20-day right on top of each other. So Costco's sort of at a make or break point right here. If the general indexes go up next week, Costco should start to run higher as well. Let's take a look at our list here, see if there's anything that was really of note. So look at Netflix, also strong, just like Amazon and Meta and Microsoft. Strong stock. Netflix just hugging along the 20-day moving average. The RSI has been trending down while the price action's been going up. Sometimes that's what we call a bearish divergence, which could mean that Netflix is starting to see the buying starting to dry up, because if the RSI is not going up along with the price action, that means there's the buying is slowing down. Okay, but that could also mean just the sideways action. But Netflix could keep going higher. If everything starts going up next week, Netflix is going to go up as well. You can use the hug along the 20-day moving average as your area to get in bullish. It's pulling back, hugging along. So the next move up is going to blast right off from this level. So keep an eye on Netflix next week as well. Strong stock. Okay, Tesla. We want to look at Tesla. We talked about the 160 level. We draw these lines from prior videos just to see, what happens moving forward. Has not been able to push down through the 160 level. You look back in the past, you can see 160 has been that area of support as well. Also, hugging along the bottom edge of the channel, trying to regain some traction here. The RSI is right here in the middle, so it's not overbought, not oversold. If Tesla's going to start to go up, it has to start going up from here. I have no play in Tesla. If I had to make a decision on what it would do, I'd probably say it's probably going to go up here because it's been holding for so long, but there's obviously a chance it could drop right through it. So, but we have no stake in Tesla right now. It's a hard stock to trade. Eli Lilly, also a very, very expensive and volatile stock. You can all see right on the 50-day moving average. So use these moving averages as your gauges of support and resistance and areas where these stocks can bounce from. If we get a move higher in the indexes next week, Eli Lilly should start to move up as well. So use the moving averages as a way to help you. Verizon, we talk about Verizon. Verizon finally got itself together down off the $30 level. Had what we call maybe a double top right here. It was looking good, and now it's fallen back below the moving edges. Not much for me to say in Verizon. Not really sure I want to get involved in this. I'm looking to see if it could hold here. If it does, it'll probably bounce. But there's probably better stocks you can trade than Verizon. PayPal, not much happening there. McDonald's on a downswing. Pepsi, just trying to kind of trading along this sideways action, nothing happening there. Here's Warren Buffett. We talk about Warren Buffett, his Berkshire Hathaway fund. Very strong stock, very strong fund, run by the best investor of all time, probably Warren Buffett. But on a technical basis, it's fallen down the last week or so, 2 weeks, below the 20-day and 50-day moving average. Will it find some support here? For the bulls, we really don't want it to come down to this 200-day moving average, although that would be probably a great place to get in. So I just have to think there's just some selling coming along with like the general market. And if the indexes start to go up next week, Berkshire Hathaway will go up as well. If you're a bull on Berkshire Hathaway, possibly could be a nibble point for getting long here at this level. I mean, you know, Warren Buffett, you can't bet against the guy. So you might as well piggyback along with him. And you can see how the stock looks a lot like the S&P 500. Went up and then it just had some selling over the last week or so. So that's Berkshire Hathaway. What else? What else do we have? CocaCola. Looking good and now you can see Coca-Cola has fallen below all three of the moving averages. Yesterday, February 12th, fell pretty hard. So what's going on with Coca-Cola? Could be more selling coming in. It's fallen below all the moving averages. Looks kind of weak here to me. I'm a long-term bull on Coca-Cola, so you just have to endure sell-offs like this. If you want to see how Coca-Cola is done in the long term, let's go to the monthly chart. Looks pretty good, right? After all these years, you get the pullbacks. Pullbacks are buying opportunities. So is this a buying opportunity on Coca-Cola? On a daily basis, probably not a buying opportunity yet. Probably got some more selling come in. You probably want to wait for it to stabilize and wait for the rounding bottom and for the next uptrend to start. So that's what I'm seeing on Coca-Cola. No play on there for me. What else do we have? Adobe, not looking so good. We drew this downtrending channel recently, and it's just stuck in this downtrending channel. You know, where is the support? Where's the next line of support for Adobe? You know, probably trying to maybe close this little gap here between 440 and 450. So there could be more selling coming into Adobe. So we want to use the charts, use the channels to help you decide should you be long or should you be short, bullish or bearish, buying calls, buying puts, selling call spreads, whatever. Use the trends, use the channels, let that help you decide, you know, when and which kinds of option trades you should get into. You can't just trade options out of the blue. You have to look at the charts, and those will help you decide when to get in, which strategy to use, and it'll help your profitability as an options trader greatly. All right, so that's that. Let me just quickly discuss about what we do here at the Smart Option Seller. We're all about option selling. We're put sellers. We're big on selling put options. If you know nothing about selling puts, go to our website, smartoptionseller.com. Go to our free ebook header here and get a copy of our free ebook. Scroll down, put your name and email address in here. We will send you an email back with a free link for the ebook. Our services here, we run a couple newsletters. We're all about selling put options. We sell put option credit spreads. We have our one on coaching if you need some help. We have our 5-part video series on selling put options. If you want to do a self-paced course on how to sell put options, take a look at that. And that's it. I hope this has been helpful. Do these free videos for the trading community. I want to help everyone become a better options trader. Leave me a comment. Give me a thumbs up. Don't forget to subscribe. Send me an email. If you have a question, I will always answer your emails. All right, you got to put in the work. You got to get ready for next week, so you got to look at the charts. That's what we do every weekend here. All right, I hope everyone has a good weekend and the next week trading. This is Lee Lowell signing off.